Welcome, everyone. This week, the Japanese market finds itself at a fascinating crossroads. You've got this huge wave of hope on one side, butting right up against a solid wall of caution on the other. The strategists over at Alpha V Research have really dug into these powerful, conflicting forces, and we're going to walk through their analysis right now.
So, what are we talking about here? Well, on one hand, there's a ton of optimism, a lot of high hopes surrounding the new Takaichi administration and its economic plans. But, on the other hand, there's this heavy dose of caution, as traders are bracing for some major decisions from central banks around the world.
So that's really the billion-dollar question for us today. When hope and caution collide like this, what's the right move? Let's break down how we can think about navigating the tricky week ahead. All right, here's our game plan. First, we'll get the lay of the land, see where the market is standing right now. Then we're going to zoom in on the two biggest stories of the week, the Bank of Japan's high-stakes dilemma and a huge earnings showdown for semiconductors. After that, we'll see how this all trickles down to consumers with a spotlight on retail before finally putting it all together to build an investment playbook for the week.
Okay, so to really understand where we're going, we first have to know where we've been. And last week, well, it set the stage perfectly for the drama that's about to unfold.
Over in the US, things were actually holding up pretty well. The Dow Jones climbed $544 by the time the bell rang on Thursday, which shows a pretty steady hand heading into a really packed week of economic news. And this points to a major shift in how the market is feeling. The VIX index, the market's fear gauge, it fell. And it fell dramatically. A drop from over 25 all the way back into the 17s, that tells you that some of that really sharp anxiety is starting to melt away from the market. But in Japan? Whoa, totally different story. It was a real tale of two halves. The market shot up at the beginning of the week, running on pure excitement for the new Takaichi government's pro-growth ideas. But as the days went on and investors started looking for more concrete details, well, that optimism fizzled out, and people started taking profits off the table.
And this brings us to the main event, the biggest show of the week, the Bank of Japan's policy meeting. This is where the new government's political ambitions are going to collide head-on with some hard economic realities.
So according to Alpha Research's chief strategist, Ala, the big headline is going to be no change. The consensus is that the BOJ will hold off on another interest rate hike this week. But here's the thing. The real story is going to be in the fine print. They're looking for a strong, clear signal that a rate hike is absolutely coming in December.
So the big question is, why wait, right? Well, there are two main reasons. First, the BOJ wants to see the actual real-world impact of the new government stimulus plans, like those proposed gasoline tax cuts. And second, Governor Ueda is absolutely laser-focused on real wage growth, and he wants to see more hard data confirming that it's sustainably positive before he makes his next big move.
Now this is where things get really interesting, because it reveals a huge tension in the market. The macro logic says wait, which is good news for banks, looking forward to future hikes, and it gives some breathing room to real estate. But strategist Beta points out a massive risk. Foreign investors have been pouring money into Japan. We're talking over yen 1 trillion in just 2 weeks, betting that the country is finally waking up from its long sleep. If the BOJ sounds too patient, it could really disappoint them and trigger a huge sell-off.
Okay, so let's pivot now from the big picture macro policy to the micro fundamentals, the nitty-gritty. Because this week is also a massive showdown for Japan's incredibly important semiconductor sector. And according to strategist Beta, the bar is set incredibly high. After we saw some, let's call them mixed earnings from the US tech giants, the pressure is really on their Japanese counterparts to deliver something special. Beating those expectations is going to be tough. And this gets to the core conflict for the whole sector. On one side, a knockout earnings report from a giant like Tokyo Electron could be the spark that lights up the entire market. But on the other side, there's a huge macro headwind. The US Federal Reserve also meets this week, and if they sound hawkish, signaling they're going to keep rates high, rising US interest rates could completely wash out even the best corporate earnings report.
So with all this high-level talk of central banks and corporate giants, you might be wondering, how does this actually affect the average person's wallet? Well, for that, we're going to turn to guest analyst Gamma from Alpha Beta Research for a special look at the retail sector.
So analyst Gamma's overall take is cautiously optimistic. And the main reason for that? It really comes down to the new Takaichi administration's economic policies like that gas tax cut, which are aimed squarely at putting more money into consumers' pockets. And that should give a direct boost to spending.
Their top pick in the sector is 7&I Holdings. And when you look at it, it's just perfectly positioned. Its convenience stores benefit directly when people have a bit more disposable income. And at the same time, its awesome lineup of high-quality private brand products is a perfect match for shoppers trying to save a buck. It's a really powerful 1-2 punch.
Okay, let's bring it all home. Based on everything we've heard from the team at Alpha Research, what's a potential game plan for actually navigating this super complex week? The playbook really boils down to 2 core ideas. First, think about keeping megabanks as a core holding, based on the idea that higher interest rates are coming sooner or later. And second, for semiconductors, the key word is patience. Don't jump in before the earnings come out. Wait to see how the market actually reacts, and keep a really close eye on Tokyo Electron's results.
So look, if you only pay attention to one thing this week, make it this: the Bank of Japan's policy announcement and Governor Ueda's press conference on Thursday and Friday. His tone, his language, every single word is going to set the direction for the entire market.
And here's your calendar for the week. It kicks off with some key earnings, but the action really heats up midweek with the U.S. Fed meeting. And it all culminates in this massive finale on Thursday and Friday with the Bank of Japan's decision immediately followed by blockbuster earnings from Tokyo Electron and Advantest. It is going to be a packed end of the week for sure. Which leaves us with this final question to think about. What's going to be the winning force this week? Is it going to be the powerful macro winds of central bank policy that just dictate everything? Or can the micro strength of individual companies, their actual earnings results, prove strong enough to sail against that wind? That is what we are all about to find out.